Hey, this is Brad Gill with NextHome Lifestyles, here with a quick monthly market update for January 2022. So January definitely kicked things off in high gear. We already had lots and lots of buyers writing offers, a ton of properties pending sale, and our inventory level already at historic lows going into January. But what's shocking is total active inventory actually dropped to 300 units across the entire month of January. That's down 52% from January last year. I think that's one of the biggest drivers right now, and the top concerns within our marketplace is just the lack of overall inventory. Now, there's a few factors that are creating the issue of lower inventory, but we'll get into those in a little bit. In the meantime, what you need to know from this market update is inventory is definitely causing price pressure to increase quite substantially, as we saw a median home price of $1,240,000 compared to last year when we were at $1.1 million. That's a 13% increase. So how are we going to start rebalancing? Well, we need new homes to be listed to the market. So the good thing is we had 639 homes listed, still not as many listed year over year, as we're 12% lower, but at least we have more homes hitting the market now in January than we did back in December. Now, let's take a look at buyer demand and see where we are. Across the month of January, 479 homes went under contract pending. Month over month, we're up from December, but the good news is, at least for home buyers, is we are down from January 2021. So while inventory is down 12%, new contracts or homes that are going under contract is also down. That could be a factor of lower inventory, and that can also be a factor of rising interest rates and the beginning of a hesitation of buyers in the marketplace from writing offers. But obviously we'll have to wait a few more months to see if that's a trend or not. Days on market, how long does it take properties to sell? 7 days. It takes just a week for a property on average to receive an offer for the seller to accept it. Compared to last month and last year, not that significant of a difference. Sales to list price ratio, the sales price of a property, what it actually sells for, or what a buyer and a seller go under contract for, versus what the price of the property was advertised on the market. So pretty shocking that we're still at 10%. So on average, homes are selling for 10% above what they're listed for. So if you're a home buyer out there and you're looking at properties and trying to determine which one to write an offer on, just remember, factor in an extra 10%. I know it sounds crazy. You got to factor in an extra 10% over already super high prices, but that's currently the momentum, and that's currently the trend that we're seeing. Compare that to January 2021, and you can see again that we're up 6 to 7% from where we were before, just showing low inventory with steady buyer demand is just, again, driving prices and driving competition. All right, the next factor affecting our market is a 30-year fixed rate mortgage. As you may recall from some of our past weekly market snapshot videos, we are keeping an eye on the 30-year fixed rate mortgage because it is forecast to increase this year. As inflationary fears come in to the marketplace, long-term rates will continue to rise. We had a forecast of somewhere between 3.3 all the way up to 4%. So currently for the month of January, we're at 3.55%. That's up month over month from 3.1, and year over year, we were sitting at 2.73. So that's quite substantially higher. That is going to impact a buyer's affordability, especially within the price ranges we have in our marketplace. So we'll have to see as interest rates rise how much that's going to affect buyer demand. But again, it's not going to solve our inventory crisis. We still don't have enough houses to sell, apparently, for the number of buyers that want to buy. 3 top concerns this year. We already talked about one, which is inventory levels, right? We just have lower amount of inventory available for anyone out there looking, which causes, again, more competition. And it creates a situation where we have increasing prices and homes selling for 10% or more above what they're listed for. The second one is inflation. Inflation is a big word this year. So how is inflation going to affect the housing market? Well, one thing you'll notice is inflation is going to begin to create a situation where you have money in the bank, your money is actually losing value. So if you're earning 1% interest and inflation right now is forecast to be 7 to 8%, you're losing 6 to 7% of the value of your money. Well, one good hedge against inflation Absolutely. Houses. Real estate. Real estate is a great hedge against inflation. It's a tangible asset. Last time we had inflation rates like we do right now, which is back in the 1970s, we saw housing overall increase 9% year over year through those inflationary years. We're probably gonna see something similar to that over the next 3 to 4 years as well. Next up, interest rates. So, inflation and interest rates. Interestingly enough, if we have 7 to 8% inflation, but you can borrow money at 3.55%, kind of makes sense to borrow the money all the way up to 5% if we have super high inflation. But interest rates also impact your affordability. So as those rates increase, more home buyers around our area and around the country are going to have an impact on what they can actually pay for a house, because it's going to affect your housing payment. Well, that wraps it up for this monthly market update for January 2022. I'm Brad Gill, NextHome Lifestyles. If you guys like what you're watching, please remember to like and subscribe. That way you get notified immediately of all our upcoming videos, so you can stay on top of the market, as well as get your burning real estate questions answered, as well as have some fun watching what we do behind the scenes. All right, guys, until next time, thanks for watching.